Let's talk about first the pricing scenario. As I said, the last time Mr. Ravi Jhunjhunwala was with us, he said that volumes may not have picked up materially, but pricing was looking extremely buoyant. As we head to the end of the quarter, how would you give us a sense of how the quarter at large has shaped up on the pricing front?
What Chairman conveyed at the end of third quarter, that situation continues and the prices are still on the higher side, and we are able to realize the market prices as on today.
Okay, so pricing, you're saying that the pricing trends that we saw in quarter 3 would continue to have continued into quarter 4 as well?
Yes, it is true.
Okay. A couple of things, Mr. Rastogi, that I think people wanted to know about. One is on the contracts. Now, I believe you were able to renegotiate some of your old contracts way back in October or November to spot prices then. And I believe the analyst community was working with an assumption that for FY18 it was a done deal. But for FY19, would that happen or no? Because you were planning to get into yearly contracts for electrode volumes as well, but quarterly on pricing. I'm guessing those negotiations would have happened already. Can you share some light here?
Yes, the contracts for year 18-19 are underway. But the only thing is, the change is we are no more doing annual contracting. We are now doing something like quarterly or at the most 6-monthly contracts. So contracts for the first quarter have already concluded and the prices are looking favorable for us.
I'm guessing, Mr. Rastogi, that you as a company would do that if you believe that prices would stay at the current levels, at these elevated levels, or probably improve, because only then would it make sense for you to enter into quarterly contracts. Is the assumption, inherent assumption, that graphite electrode prices would stay stable or increase during the course of FY19?
See, why we are doing quarterly contracting from the erstwhile practice of annual contracting is the market itself on the raw material supply side, the contracting has changed. It used to be annual contracting. That contract pricing has changed to quarterly contracting. So we want to secure our margins by, doing the sales side contract as well on a corresponding quarter basis.
Okay. Having said that, I'm guessing you would inherently also believe that prices would at least stay stable, right? Otherwise, you might as well lock the prices for the year.
See, I can only foresee that the prices have improved from what level they were till the previous year, which is financial year 18. So keeping that in mind, and also the raw material constraint where we are contracting for quarter, we want to contract for a quarter, and we see the prices not coming down from the present level.
Present levels would be what, $6,000 per ton, Mr. Rastogi?
See, the specifics cannot be shared, but I can only say that, yes, these numbers or even higher than these numbers is what we are seeing today.
Well, which is actually pretty good. I'm happy for you, Mr. Rastogi. The other question and other point that most people were also wondering about back then was the global needle coke. The production, I believe Mr. Jhunjhunwala had also mentioned, that was being diverted to lithium-ion batteries as well. And you had semi-annual contracts for the raw material till March. How is that picture shaping up for FY19?
See, for needle coke, we have the volume contract or the quantity contract for the entire year, which is calendar year 18 in place. But with the vendors, the pricing is being settled on a quarterly basis.
Okay. So would there be an impact on utilization due to needle coke availability for FY19, Mr. Rastogi?
Yes, we see an increase in utilization from the present level of 80%. We believe that with the present level of contracting and volumes that we are committed with the suppliers of needle coke, the capacity utilization may go up around 90% this year.
That's music to the ears. And that's a bit of a deviation, isn't it, Mr. Rastogi? I mean, the assumptions of the analyst community, rightly or wrongly otherwise, is a separate thing. But was that due to needle coke issues, the capacity utilization levels for you, maybe in Graphite India, would come down? Here you're saying that the capacity utilization in FY19 will move up from where it was in FY18.
So this is based on the situation that we are seeing as on today, and we at least are sure about at least the coming 2 quarters. And we believe with the volumes that we have committed with the vendors, we should be higher than at least calendar year 17.
So all of this...
So calendar year 17 has been 82%, and we should be at least 85% in the coming year.
So all of this leads me to believe, Mr. Rastogi, that the earnings traction that a company like yours had started showing in the last 2 quarters of calendar year 17 would only accelerate at least in the first couple of quarters of calendar year 18, if not longer.
I think we only see that the market is favorable to us. Acceleration of these terms are relative, and people would not like to comment on acceleration, but yes, maintaining or improving on the current margin is what we can foresee for at least the coming 2 quarters.